Stocks are on pace right now to snap a 3-week winning streak. Investors are eyeing two big developing stories out of Washington at this hour. President Trump is launching a new wave of tariffs as the clock ticks closer to a government shutdown. We have full team coverage of both on these fronts. Emily Wilkins is tracking the latest on the shutdown dynamics. But first, we will start with Eamon Javers and the new round of tariffs being announced. Eamon.
Dom, that's right. President Trump announced a slate of new tariffs late yesterday. They're focused on pharmaceuticals and trucks, among others. He said the U.S. is going to impose a 100% tariff on any branded or patented pharmaceutical product entering the country. That'll begin on October 1st. But that will not apply to companies that are building drug manufacturing plants in the U.S., and it won't apply to projects where that construction has already begun, he said. Separately, the president said he's going to impose a 25% tariff on imported heavy trucks, also starting October 1st. And he also cited national security for new tariffs on kitchen supplies and furniture, announcing a 50% tariff on all kitchen cabinets, bathroom vanities, and associated products, and a 30% tariff on upholstered furniture, both starting on October 1st. And the president also announced so-called Section 232 investigations. He announced those on Wednesday into imports of robotics, industrial machinery, and medical devices. Those investigations could be a precursor to tariffs on those products as well, so something to watch for there. The president acknowledging yesterday that his trade war has caused some fallout for American farmers who have seen a drop-off in Chinese purchases of American soybeans. He said he's going to develop a mechanism to transfer some of the tariff dollars that he's taking from American importers, transfer those dollars to American farmers. The mechanism of all that, how much money is at stake, all that still TBD at this point, Tom. Back over to you.
All right. Variables and movement there. Eamon Javers in Washington, D.C. Thank you very much for that. Now let's get over to Emily Wilkins as the clock ticks closer to a possible government shutdown. Emily, just how likely does it look right now?
I mean, Dom, every day that passes, a shutdown is looking increasingly likely. And that's because both sides have really dug in on their positions. There just don't appear to be serious negotiations going on to try to get to some sort of agreement. That means we could be headed into the first full government shutdown since 2013. There's no part of the government that's funded at this point. Here's what to expect. There are many things, but first of all, no jobs data on Friday. If the shutdown begins Wednesday, goes to Friday, we're not going to have that. There also, as the shutdown goes on, are going to be delays for things like company certifications. You'll see a slowdown in the process for companies to go public. And then, of course, no pay for federal workers and contractors while the shutdown goes on. And that can be huge. I mean, the last shutdown we had, a partial shutdown at that, began in 2018. It delayed $18 billion for compensation, for payments, for purchasing of goods and other services that the government has through these contractors. And since the U.S. National Parks and monuments are also going to be shut, the U.S. Travel Association estimates that the travel industry is going to lose $1 billion each week of a shutdown. And of course, there's a new wrinkle this time with the White House threatening massive federal layoffs for employees that could impact hundreds of thousands of workers. Now, it's not clear exactly how many employees would be impacted. The guidance to the agencies is to not reduce workforce for programs that are in line with Trump's priorities, but it doesn't make it clear exactly which agencies that would be. It also does raise the stakes for what a shutdown is going to mean for industries and the economy. And Dom will be keeping a very close eye when lawmakers return on Monday as to what happens with the vote that we are expecting Monday afternoon.
All right, Monday. We got to keep a close eye on that. Emily Wilkins in Washington, D.C. Thank you very much for the update there. Let's now bring in the investment committee for some reaction to this. The headlines certainly haven't moved the market dramatically. The shutdown, we've seen some of these things in terms of a kind of showdown in the past. Markets do react, although maybe handicapping-wise, as they kind of see incremental developments. So, Steve, I'll start with you. Is this a worrisome development here, either and or tariffs and shutdown?
Okay, so let's go through both of those. First of all, in terms of the government shutdown, I've been doing this show from day one, getting on 16 years, and maybe this is the 12th forecasted government shutdown. And guess what? The market's a lot higher than at any point during those last 12 years. So I'm not going to say it's not an issue. Of course it's an issue, because in a environment that's somewhat challenging, despite where the indices are, this just adds to it. But overall, I'm not concerned. This will resolve itself. I don't think either party really has the appetite to go back to their constituents, of which there are a number of public service employees and others that depend on public service employees, to say we're responsible or point fingers and just, not have them buy that it wasn't them. So that's one. So could happen. It's the first time I've seen where a president has been unwilling to meet with the leadership of the other party. So I'm not going to say that's not new, but I will say that's not surprising at all. Now, in terms of tariffs, well, look at the stocks and look at the drug stocks. They're up. So Trump's gone back and forth on tariffs, will continue to go back and forth. The market at this point doesn't take his pronouncements seriously. Look, I think it's kind of business as usual. And then you've got the Supreme Court, which is out there, which may do away with all the tariffs. But I'll tell you, one of our robotics team up there, we're involved investing in a robotics company. It's fully automated, the warehouse. In other words, no people whatsoever. Nobody's even close to the technology. That's nimble.ai. While we've taken all our supply chain from overseas, China, everywhere else, and brought it here, it's not as if we're getting cheaper prices. So what every company here has done has used those tariff levels as a pricing umbrella to raise prices. So aluminum, for example, 50% tariff there. If you come here, you'll see prices have gone up 35 to 40%. So that's the canary in the coal mine. That's the troubling issue as we go forward, as the Fed decides whether inflation is just temporary and a one-off, or if the Supreme Court allows these tariffs to take hold and continues through the presidency, if we'll continue to see prices go up. Right now, the markets are ignoring it, and there's vast complacency. And I wouldn't really call what happened over the last period of time as a correction, because we're still up meaningfully.
It's not, Jason, that we don't believe it's important or the market doesn't believe it's important.
Yeah.
It's more the idea that this playbook has been in place with President Trump to a smaller degree in his first term,
right,
and much more so now. So we've seen it now multiple times, the playbook happen.
Right.
It's not to minimize the effects on the market. It's just to say that the market's gotten accustomed to it, to Steve's point.
Sure.
But it's also now identifying parts of certain industries that are having advantageous relative advantages, right?
Right.
To other parts. So he mentions drugs.
Yeah.
There are some drug companies that are up because they have relative exposure more so towards the U.S. than others do. Others that have less exposure are actually pretty decently down today. So how exactly as an investor do you play that? Do you have to really play the tariff fundamental game to pick stocks?
Yeah, no. Listen, we heard from Ken Griffin the other day about, tariffs haven't hit the tape quite yet. And I would largely agree with that sentiment in this sense. I think there was a lot of inventory build in anticipation of the tariffs hitting the tape that happened, and so the consumer has not quite been exposed to those numbers yet. I think in the coming quarters, you will not see enterprise continue to digest that pill because those numbers will be hitting their balance sheets. So I think it's clear to me that hasn't happened yet. Do we know that affects the lower end of the consumer base? Absolutely. 50% of spend comes from the higher end consumer, right? So that is the folks that are continuing to uplift us and keep us higher and stronger, and markets are obviously continuing to perform. But I do think that part of that story looms large for me going forward, and seeing how enterprise deals with upcoming tariffs. Because it is a consumption tax.